At some point, the American government should come out and say, now we've emptied this out, or we loot it, or whatever. Life insurance companies are actually required to invest in government bonds. That means you're investing in debt. Of course, now they have a huge gap in their retirement provisions and have to figure out how to fill it.
I have some doubts about the origins of Bitcoin. There are patents from the NSA, from the intelligence agencies that SHA-256 were once patented. And I believe that Bitcoin is definitely something where you can make a lot of money in the short term. But now I come to the question, do you think that Bitcoin and the others, all the cryptocurrencies, can also be a long-term investment strategy?
Bitcoin, yes. The other cryptocurrencies, no. Of course, nothing is set in stone. But you just mentioned the NSA patent. For encryption cryptography, SHA-256. Yes, the NSA actually had that patented, but that means, yes, then it's also secure. But the idea that the NSA is behind Bitcoin, which is often suspected, I don't see that. And if they were, then it would have slipped out of their hands. Because there is no backdoor, and I believe there is no network that gets attacked more often per day than the Bitcoin network. Because, of course, it would be a major milestone if someone managed to crack it. In that regard, I am completely relaxed. And even if the American government were to come out at some point and says, why? So now we've emptied it here, or we're looting it, or whatever, then they wouldn't need to implement crypto regulation. They wouldn't need to buy Bitcoin themselves and establish a reserve, etc., and so on. They could simply turn off the tap. No, so Bitcoin, I actually wrote an entire book about it. That was the book. I've written 7 books in total, but that was the one I thought about the most, and it also took the longest to complete. It's 600 pages, 2.5 years of my life, and of course, it's also available as an audiobook, 21 hours long. And after reading it, you really have to, if you've read it, then well. I don't know anyone who said, oh, no, Bitcoin is crap, but rather everyone, even the biggest critics I had among my acquaintances, friends, or even colleagues who read this book, even the biggest gold bugs afterwards, some of them were infected by the Bitcoin virus, while others said, okay, I think it wouldn't be a bad idea to allocate a little into Bitcoin. And now they're all happy too, because since the book was published, Bitcoin has more than doubled in value. And now they're also on board. And for me, it's digital gold. I also don't see Bitcoin as a competitor to gold. Rather, I see them both as big brother and little brother in the fight against the worst monetary system, namely the fiat money system. And in that respect, for me, Bitcoin is definitely part of a long-term investment if you want to diversify your portfolio. Everyone has to decide for themselves, even just 1%. That's what I would recommend to everyone, even to those who say, I hate Bitcoin. Still, 1% as a counterweight against the whole system, because it's the only system that is not part of the dependent on central banks, or of course, if someone wants even more than 1%.
That's very interesting. If you've now, let's say, made your fortune with this classic Bitcoin story, there really are a lot of people like that. I even know some very young people, and I'm happy for them. And of course, I'm a bit envious because I didn't manage to do it myself.
There's still time.
There's still time.
You can still get in.
It's still affordable. I'll do it right after the show. Now is actually a good time, I think.
I'll send you the book. Yes.
Yes, great. Definitely. I'll listen to it. I actually like listening to audiobooks. I find that very convenient. But so I don't get off topic now. If someone has made their fortune in Bitcoin, should they then convert it into tax-free gold? Or should they stay in Bitcoin for now, since the chances are so high that it will keep rising? That is a difficult question, probably.
Well, Bitcoin is tax-free in Germany and in many other countries as well. So in Germany, for example, profits from precious metals, diamonds, that is gemstones, as well as Bitcoin are tax-free. After a 1-year holding period, they are tax-free. There are also many other jurisdictions where Bitcoin is tax-free. You can look into that. And I also know many people who at some point had such a large stash of Bitcoin that they said, now it's worth it to leave or emigrate. But I'm a big fan of diversification. That means I would never put all my eggs in one basket. For that reason, I always recommend to people when they're, for example, in my fee-based consulting, that they spread their chips a bit and say, I'm going to build up other pillars of wealth as well. Especially for young people who are only active digitally, I would definitely say also buy a bit of gold, buy silver, invest in other tangible assets as well, simply so that when the bear market comes, which it always does, you're not caught off guard. That way you won't end up having sleepless nights and so on. You'll sleep better too. And that you also realize and take profits from time to time and simply diversify your portfolio more broadly and not just put everything on one card. That's never healthy.
Yes, exactly. Of course, the question immediately comes up, but I have to say to everyone, you should only do this with, how should I put it? You really have to think carefully for yourself about how you handle it. Because the question is, no one can predict the future. But if you had $1 million to invest right now, how would you allocate it percentage-wise? It's a tricky question because I don't think you can really say that exactly. So
if I only had $1 million and nothing else, then I would definitely, depending on where I live and so on, see if I could maybe get a small house at a good price. So at least I wouldn't have to pay rent anymore and my fixed costs would go down. And then I would definitely buy gold. I would buy silver. I would buy Bitcoin, and I would buy stocks in the form of stocks, individual shares, or ETFs. And that would be it. I wouldn't, for example, buy land or things like life insurance or bonds. So fixed income securities, I wouldn't do that either. Nor would I buy multiple properties. So really diversify. The 3-bucket rule is actually not bad at all. Like from the Bible, where you say, okay, I have about 1/3 in gold, 1/3 maybe also in silver, and then also a property. And then I would build up 2 or 3 more pillars, as I said, in the form of Bitcoin and securities or ETFs.
Well, it's good that you also say not to get life insurance, because those are just... So I urge everyone, check at home. So I don't think there's much more to say about that.
Yes, you already wrote in my first book back then, which I wrote in 2010 and was published in 2012. So out of paper assets and into tangible assets, because now the era of tangible assets is beginning. And if you take a look, I mean, life insurance companies are actually required to invest in government bonds. That means you're investing in debt in the hope that the states will pay back these debts. And we can see that the yields on all these bonds are below the inflation rate. It's a losing deal. And I see it every day at work when customers come in who have paid in for 10, 20, 30, 40 years, then retire and say, oh my God, the insurance broker promised me this and that. And then the actual number looks completely different from what they expected. Yeah, of course, because there were not 7, 8, or 9% returns like on the stock market. Or, I mean, just look at gold. Since the introduction of the euro, gold has performed better than the stock markets, but that's because there were only 1% returns, 2% returns, 0 interest rates, and so on. All of that, of course, messed up the returns. And now, of course, they have a huge gap in their retirement savings and have to figure out how to fill it.
That's right, yes. Now, of course, I'm somewhat biased. I'm not sure how to put it exactly.
Biased or?
Biased, yes. Thank you. With gold and silver, of course. That comes with the whole business now. With goldvoorsorg.com, and we always focus on real physical gold. And at the same time, since we've already talked about fears, my clients have this big fear. Now the big crash is coming. In your opinion, how close are we to that, really?
Well, crash, I mean, I wrote a book that was even called The Greatest Crash of All Time. The question, of course, is, are we talking about an ordinary stock market crash or a systemic crash? And when it comes to a systemic crash, I would say we're right in the middle of it. We can see it happening. Nothing works anymore. Politics, the parties people used to vote for, they no longer deliver. We can clearly see it. Things are crumbling everywhere. We're already in the midst of this greatest crash. A stock market crash, yes, that will come. But for now, things will continue because, of course, the key players in the financial world will throw everything they've got at it into the pot to keep the whole money carousel spinning. And that's why we'll continue to see quantitative easing, interest rate cuts, even more liquidity. And liquidity drives up all asset prices. First in the stock market, then, of course, precious metals prices, Bitcoin, real estate, and so on. And then you simply have to be invested in these tangible assets. Otherwise, you will definitely lose purchasing power, and with it, time in your life. And yes, I think that in the next 5 to 10 years, we will definitely see a systemic break because things can't go on like this. Our current model has proven to be outdated. And we simply have to rethink things. But the thing is, we somehow think we've cornered the market on wisdom and that the way of life we currently have is preserved for all time. But if you read reports from the days of the empire, whether it was Wilhelm or Franz Josef, they thought the same thing back then, that they were the pinnacle of civilization and that things would always stay that way. Well, not even close. Look at it 100 years later. So Kaiser Wilhelm once said, why would I need a car? I've got a horse after all. It's almost unimaginable to us now. And to think that the way we live right now will stay the same forever is, of course, pure hubris that will come back to bite us, because naturally the structure of society will also change. In fact, there was even a famous German politician who said that the democracy we have right now probably isn't the final stage. and that there's an evolution there as well, just like with everything in humanity. And I believe that too. I also think that with these external factors, artificial intelligence, blockchain technology, digitalization, so much will change that in 10 years, we'll probably be living in a completely different world. And if we manage it well, it will be much, much better. And I'm definitely optimistic that we will then definitely end up in a better future. And that's why, yes, the crash is coming, of course, obviously, in every respect, both monetarily for sure, and also systematically. But that doesn't have to be the end, because we all know there is no healing without pain. And you first have to go through the valley of tears, experience catharsis, in order to then witness renewal. An Austrian colleague of yours, Mr. Schumpeter, said exactly the same thing. We need this creative destruction, and that's really how it is. You might even see it in your own life story. If you have the courage to take new paths, you will be rewarded.
It really is the valley of tears. You have to go through it. And there are many similar sayings. They're all true. But of course, this valley of tears brings my clients back to me, and they understandably ask me about a few things that I would also like to bring up here. And these are topics that cause fear. I don't know, maybe you can shed some light on this. The first fear topic is the asset register, a hot topic. What's going on there?
Yes, that's a good question. Well, there are a lot of rumors, but nothing concrete yet. Of course, there are efforts within the EU. The fact is, this is obviously completely overreaching, but it also speaks to the final stage of the institution of the European Union. For me, that's SED 2.0, when they basically start collecting information from citizens in Europe, possibly to impose some kind of taxes later on. Always, of course, under the guise of security, money laundering, tax fraud, etc. But in the end, all 97% of people who are honest and do nothing wrong, they all end up being criminalized. And that's not a good development. And for me, it's usually just a pretext, of course, because we must not forget, if you give up freedom for security, in the end, you always, always, always lose both. History also shows this as a common thread running through the evolution of humanity. And in this regard, I can only warn against it, as I said. At the moment, there is nothing concrete. There was this draft, but it hasn't become law yet. So when the time comes, we'll have to talk about it. And of course, some people will then leave Europe and say, that's it. So maybe I'd be one of them too, because I just don't feel like revealing my assets to an institution that isn't democratically legitimized by me in any way. Because let's be honest, they're not doing this just for fun or out of boredom, but because they know they'll have to plug all these gaps at some point. And for that, of course, they need the citizens' money, because not the government, not the state goes bankrupt. It's always the people who go bankrupt. Everyone needs to keep that in mind. That's why it's so important for us to achieve financial intelligence. Your clients, those who have gold, they've already understood this, but the others out there haven't. And those are the ones we actually need to reach, because otherwise this is just intellectual inbreeding.
That's true, yes. So in that sense, we're both missionaries on a good mission, as I said. But when you're on a mission, questions come up, and now you've also mentioned the emigrants we've already talked today, and of course they ask me too, what about the CBDCs? Now they're really afraid the digital euro is coming, central bank money, what will happen then? Will I even be able to get anything for my gold anymore, and so on? What is your...
Yes, well, I've actually written an entire chapter about this in my book. And of course, it was called The Digital Dictatorship. It's a digital prison. So when the CBDC comes, they'll of course try to make it appealing to us gradually, using the salami tactic with incentives and appeasements. There will always be cash as well, and so on. But then at some point there will be a cut, because then they'll say, first, too little money is being used, meaning cash. It's too expensive. It can spread corona. So you know all the lies that will be told then. And then at some point, you basically end up with only this digital money. Depositing will always be possible, meaning you can still exchange euros, cash, with CBDCs. That shouldn't be a problem, but the money just doesn't come back out. Then you are completely transparent. If, of course, there's a government in place that's well disposed toward you, that's fair and good, then it's not a problem. But if that's not the case, if there's a regime change, then it can, of course, be used against the citizens at any time. And then you also have programmable money. That means programmable. For example, what are you allowed to eat? What are you allowed to buy? Where are you allowed to buy it? Are you only allowed to buy it in your local area? If you sit in your car for more than 20 minutes, then it stops working. The wallet or the debit card just stops working. You could link it to the vaccination passport. You could also immediately implement demurrage money, deduct taxes. So there are so many possibilities that I think even George Orwell himself would say, well, compared to this, 1984 was child's play. And that's why it shouldn't even be handed over to politics in the first place, because otherwise they'll really be tempted. And then some left-wing or right-wing nut jobs could come to power and say, oh, all right, that's easy peasy. Let's set up an authoritarian system here or a social credit program like in China. And that wasn't easy before. That's why you should definitely pay in cash as much as possible. You have to get your money out of the banking system while you still can. That means, yes, take it out of the visibility of politics, invest in tangible assets, gold, silver, stocks, etc. And of course, also Bitcoin. And take a stand against it. Share this video so that people are informed as well. Because of course, otherwise you only hear on the news or on ORF, CBDC makes everything easier. It's super convenient. It can't be stolen anymore. It sounds tempting, but usually if something sounds too good to be true, it usually isn't true. And of course, there's always an ulterior motive. And that's why you should always ask cui bono, who benefits? And it doesn't benefit the public. Even Ms. Lagarde herself starts to falter when she's asked, what is actually the advantage of CBDCs? At the moment, the majority of payments are already made digitally. So why do we even need this at all? And then she starts to stutter. And I have a good acquaintance, also a whistleblower at the ECB, who told me very clearly, it's really just about control, about transparency. They want to know exactly who is paying whom and why. At the moment, at the end of the banking day, the ECB only receives information about which bank transfers what to whom, where payments are made, which bank pays which bank. But they don't see who is behind it and for what purpose, above all. And that really gets on their nerves. And in addition, the ECB also wants to reduce the number of banks because according to them, we are overbanked. Always. And that's why I always say, watch Lord of the Rings. The Tower of Sauron, that's like the ECB building in Frankfurt. And it's not for nothing that they say, yes, one ring to rule you all. And here it's just one currency to rule you all. And that's why I can only say, stand up against it. Pay as much as possible in cash. Avoid using credit cards if you can. It's cheaper anyway, and you have better control over your expenses. And get informed about the monetary system, because I've written 7 books on the subject. And I really agree with that, with Henry Ford, who said, if people understood our monetary system, there would be a revolution before tomorrow morning. And that's exactly how it is, because we all work every day for money. We invest the most valuable and precious thing we have, our lifetime. But hardly anyone knows, how is money created? How do I invest money wisely? And do I even have financial intelligence? Since my first book, I have been calling for a school subject. Financial intelligence, so that even children from 5th grade on know what to do with their money on World Savings Day. Why does it make no sense to just leave it in the bank account? Why should I invest in gold, in stocks, in Bitcoin, and not in something like a savings bond and so on? So we really have a lot of financial illiterates throughout the German-speaking world, actually globally.
That's right. And as you say, that was actually one of my questions, what you think of such a school subject. And you've already said it so. And why something like that isn't introduced. You could also ask yourself what's behind it, maybe to keep people ignorant. But you say,
I have to jump in here for a moment. It could be that it's intentional and malicious. But I've met a lot of politicians in my career. I also spent 4 years in political consulting, and I have to say 99% of politicians, whether in Austria, Switzerland, or Germany, or I was just with British parliamentarians, they simply have no grasp of money at all. That's true, period. For them, it's like a book sealed with 7 seals. They can be academics, they can have doctorates, be professors. They don't know how the monetary system came about, how money is created, or how best to invest their money. I see it every day in my own fee-based consulting practice. Highly paid professors come in, sometimes even people from the financial sector, as well as from sports, acting, and the film industry. And sometimes I'm truly speechless, and then I really lose hope in humanity, honestly. But that's just how it is, and I can't really blame anyone because there simply isn't a school subject for this.
Right, yes, exactly. And as you mentioned earlier, you are in the fortunate position of having a whistleblower at the ECB, whom of course we won't discuss further. But he will probably tell you one thing or another about how inflation will develop from the ECB's perspective. Are there any insider tips? Inflation will continue to rise, presumably. What is your assessment?
Interest rates need to be lowered. As soon as they lower the interest rates, liquidity will of course flow into the system. The fact is there will be a second wave of inflation because you always have to remember monetary systems never die in deflation, but always in inflation. Donald Trump saw that the unbacked book money system can no longer be sustained. The Chinese, they no longer export gold either because they know, okay, we are now at the end of our monetary system.